Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and bring them down to bite-sized pieces. Today, we've got some bad news from Robert Kiyosaki. Also, some more bad news from Robert Kiyosaki. And it all really has to deal with what is going on with the economy, businesses shutting down. Top economist Mohamed El-Erian also gives the same picture, and it looks like we've got more shutdowns. But there's hope and can be seen in this fantastic piece by Billy Bambrough. We're going to talk about a $1 trillion market cap. And finally, one metric that has me cautiously optimistic, which is the amount of hodlers out there. So we'll get into all that, but first let's take a look at what's going on with the market. Today is Monday, June 29th, about 4:30 Texas time. And it looks like Bitcoin is Bitcoin, 1%, pretty much moving sideways. Everything around really going that way, except for Cardano. Now, if you remember, Cardano's mainnet launch is due at the end of June, and at the latest, July 7th. So says Charles Hoskinson. So let's see if they can keep that date. But everything else is pretty much the same. So let's jump into today's top stories. First up, my man Robert Kiyosaki. Always got something negative to say about the Fed, which who doesn't these days? But he states Bitcoin is real money. It can stop the Fed from screwing you, says the author of Rich Dad, Poor Dad. So what essentially he is talking about, and I'll just read the actual little snippet, and I'll just paraphrase the whole article. Mr. Kiyosaki is calling on people to stop thieves by saving gold, silver, and Bitcoin. And I gotta tell you, I think that is a fantastic savings account. Gold, silver, Bitcoin. Because if you're going to use the dollar as your way of saving, you have to remember that the dollar itself is subject to inflation. And we can see over the last, roughly 100 years or so, how the actual value of the dollar has been eroding and eroding. And isn't it amazing how when the Federal Reserve was actually created in 1913, we saw a huge drop-off. Then here we go. FDR makes it illegal to hold gold coin, bullions, or certificates. Another drop-off. USD is the world's reserve currency. Interesting. 1971, Nixon takes it off the gold window, and here we are today. So $1 in around 1913 is equivalent to around a nickel. So if you think that just saving your dollars, and I know that's not very many of you, is going to lead to financial stability, you have to look at that second tax, which is called inflation. So then, Mr. Kiyosaki states, real money is created when people produce. I cannot agree more. For example, if you bake cookies and sell them, you create real money, goods and services. When people are paid to do nothing, your cookie money is stolen. When Fed prints trillions, Fed saves friends, screws everyone, stop thieves, save gold, silver, and Bitcoin. And I got to tell you, if you are looking for a savings account, gold, silver, Bitcoin, great way to go. On top of that story is another one where Robert Kiyosaki again, and rightfully says, calls Bitcoin hedge against growing zombie debt. And I think this is a bigger story than what's being let on. I think most of you, especially you watching this video, you're probably more well-versed in what is going on as far as the economy goes. But this is what is the scariest part to me. And it states, zombie debt to surpass 1.6 trillion. The major real estate and Bitcoin investor, Kiyosaki, expects it, meaning the debt, to surpass 1.6 trillion. Mr. Kiyosaki believes that Bitcoin, silver, and gold can serve as hedges to the heavy inflation that is expected to occur in the aftermath of the present QE, or quantitative easing, also known as quack economics, conducted by the Fed. And he states, Fed is dead. Loans to zombie CEOs cannot be paid back. In 2020, zombies owe $900 billion with declining income. By 2021, zombie debt to pass $1.6 trillion. Unbelievable. Got gold, silver, Bitcoin. And then a great statement here from Marcus Aurelius, accept whatever comes to you woven in the tapestry of your destiny. And I have to tell you, this is it's super concerning, because the money that is being printed, we are printing debt. And as time goes on, at some point, we're going to have to pay for that debt in some way, shape, or form. And it could be in the form of major taxes, but we will see. And actually, my man Peter Schiff, who is a huge gold bug, pretty much states it right here. Mr. Schiff has referred to inflation as a sign of higher taxes in the future. Even if you do not see any actual taxation, it can be implemented by taking away the purchasing power of the printed money. Think of inflation as a tax. All government spending must be paid for by the public. If the government doesn't collect their money in taxes, the Fed prints money to confiscate their purchasing power instead. Anyone calling for higher inflation is really calling for higher taxes, and that is the same thing what's going on. So we are printing. We have to make this up in some way, shape, or form. It's maybe not today, maybe not tomorrow, But I have to tell you, it's coming. And I don't know when, but it's going to hurt a lot. And I think that kind of leads me into what we're going to talk about right here. So this is Allianz's chief economist, Mohamed El-Erian, and he always has good information. So in the next 2 minutes, he's going to tell you what kind of economic recovery we can expect, what kind of pitfalls we have, and what's going to actually be laid out before us over the next weeks, months, and years. So let's take a listen.
Today we're talking to Mohamed El-Erian. He's the Chief Economic Advisor at Allianz and the former CEO of PIMCO. Mohamed, thank you so much for joining us today. I want to start out with your outlook for the economy overall. How long is it going to take for the global economy to get back to normal?
If we don't get specific policies that we can talk about, it will be a long and rather flattish recovery. And we have to understand that we're going to come from levels that will still be eye-popping, notwithstanding really horrible numbers we've seen so far. So we are going to be in a very deep hole. And unless we get policy accelerators, it will take us quite a long time to get out of it.
Are there parts of the economy that you think might never return to what we would see as normal?
So there are going to be a very wide range of winners and losers in this economy, not only among companies, but also, unfortunately, among people, with the most vulnerable segment being most at risk.
So let's talk about some of the policies that are necessary then to try to address that inequality.
You've got to address productivity. It's about infrastructure. It's about retooling and retraining of labor. You've got to address household economic insecurity. It's about better safety nets. And then you've got to do something about globalization. It's one thing to deglobalize. It's another thing to deglobalize in a disorderly fashion.
What are some of the factors that might keep the unemployment rate at that high level, given that we were at 3.5% just in February of this year earlier?
So I think part of it is companies not coming back. We're going to have, unfortunately, lots of bankruptcies. Once a liquidity problem becomes a solvency problem, you cannot reverse it that quickly. Certain activities that happen to be very labor-intensive, hospitality is very labor-intensive, are not coming back. Then you have existing companies that are now no longer talking about resizing, they're talking about right-sizing. And most of them, unfortunately, right-sizing means less labor. So existing companies will also be shedding labor. And then the sectors that are going to be really favored in the next couple of years, other than healthcare, are not that labor intensive.
So that's it. So if you're watching that and you're sitting at home and you're furloughed and you're worried about your job, can you get it back and what's going to happen? You have to look at what's going to happen forward thinking. What is out there? What is the ability for me to regain the same position that I had, the same job that I had? And is it really going to actually happen? Is it going to come to fruition? And this leads me back to the quote that was just said. Accept whatever comes to you, woven in the tapestry of your destiny. So here's the problem. All these different things that he has talked about, we can see it happening all around us. This was from Market Watch. This was 3 or 4 days ago. 41% of businesses closed on Yelp have shut down for good during the pandemic. This was as of June 15th, 140,000 businesses listed on Yelp. Site remained closed due to the coronavirus pandemic, and all the businesses closures since March 1st, 41% of them have shut down permanently, according to Yelp's latest local economic impact report. Although 20% of the businesses that were closed in April have reopened as states have started relaxing social distancing guidelines, retailers and restaurants remain especially hard hit. Shopping and retail stores have suffered 27,000 closures, while 23,000 restaurants listed on Yelp are still closed. Beauty and fitness centers are also among the sectors struggling the most. So let me just break that down for you. If you're in any of these industries, this is a red flag. And what you need to do is start to look at what is the big picture, where is everything going. I can just tell you right now, where retail is going, it's going online and it's going through Amazon. And that's why I created an Amazon business 2 years ago, because I knew this was going to happen. Once we had a huge shutdown or some type of big economic wave come through, the one that would win is the one that is the leanest and probably has the most market share, and that's where Amazon is. So you can see that from everything closing from like your Sports Authorities to your Targets to different types of mom mom and pop places. I mean, those were already going, and then it's just going to accelerate. Restaurants, you can see the same thing happening. So what really is a big type of industry? Well, DoorDash, all those different things where people actually go to those stores, those restaurants, pick up and deliver to people. Dining in is going to still be there, but it's going to be very less. Beauty and fitness, that's why fitness types of programs that are like stay-at-home type of fitness places, people are not going to want to go back to the gym in those droves that they used to. People will still go back to the gym. I will still go back to the gym. That is just me. That's how it is. But you're going to lose people, and when you lose people, you lose revenue. So look towards the future of where everything is potentially going. Which leads me to more bad news, and that is these are the states that have actually are reclosing in America. So for all my friends out there from Australia and Europe and Mexico and Canada and India, we actually had been reopening across the country. Now we have my state of Texas. We've had a rapid increase in coronavirus cases, so we are actually reclosing. Florida the same way. California is just the mayor or the governor of California, Gavin Newsom, just issued a stay-at-home order, and I believe Georgia is also in that area. And then I think there are more coming about. So if we look at the positives, not too much. When things start to close down again, it is another economic slowdown. So again, this is why you're watching this video. If you're watching this video, you are one of those people who likes to look forward into the future of what is actually going to happen. So we know that cryptocurrency digital assets are going to be an enormous part of our society across the globe. The next question is, what kind of jobs are out there that can be done? Because some of these are just not coming back. And I will say this, for all this different economic downturn, I know there's a disconnect between Main Street and Wall Street, but I do not see Wall Street being able to keep up this charade for much longer. I do see some crashes coming in. I've always said that. But let me know what you think in the comments section. Let's move on to our next story. So, how about a little positive news? So Billy Bambrough, this guy loves his writing. He puts out a story, Perfect Storm Can Push Bitcoin Market Over 1 Trillion, Research Reveals. So before I get started, I am not going to blow sunshine up your tailpipe because that's not what I do here. So we'll read it, and I'll tell you all about it, and I'll tell you that I'm actually kind of tired of these types of stories. So Wall Street's highly anticipated institutional support for Bitcoin has so far failed to convincingly materialize, though recent moves from some of the world's biggest banks suggest it's coming slowly but surely. Following hedge fund manager Paul Tudor Jones' recent foray into Bitcoin, researchers have found an aggregate 1% institutional allocation to Bitcoin can easily bring Bitcoin's total value above 1 trillion with a perfect storm, potentially making each Bitcoin token worth over 50,000, up from just under 10,000. So let me back up. What Billy's talking about here is that through recent moves from some of the world's biggest banks, he's talking about JP Morgan and how JP Morgan has actually allowed Coinbase and I think it was just Coinbase to do ACH transfers and that type of thing, which they said they never would, and now here we are. So on that part, the banks, one bank is doing well with cryptocurrency. Now there's other ones, I mean Santander and some different ones with Ripple and XRP, sure. So that's what he's talking about. But this next part here, when I keep hearing about these 50,000, 100,000, I know it's going to happen, but some days I'm just like, ugh, another one of these stories. And the problem is that, I mean, how many times we got to hear this? I mean, you've been waiting for a long time. I've been waiting for a long time for this parabolic bull run. When is it going to happen? Because I've been hearing the same thing since 2017, and here we are. But I will just say that out of all these things that we hear about, that's why I bring these stories to you about adoption, about things moving in the right direction. I don't bring you stories about TA because, first of all, I don't believe in it, but I like to see how the actual macro environment is actually moving towards mass adoption. And I'll get to that right now. So at stakes here, institutional investors are the white whales of crypto. Ryan Watkins, an analyst at Bitcoin and crypto research firm Messari, wrote in a recent report adding that, depending on your assumptions, an aggregate 1% institutional allocation to Bitcoin can easily bring Bitcoin's market cap above 1 trillion. So I'm just going to skip down. So what he's talking about here is this 1%, is he had this little graph here. And you have these different types of organizations and institutions. So endowments and foundations, family offices, sovereign wealth funds, pension funds, and mutual funds. If they all just put 1%, just 1% of their assets under management, you would have 20 million from endowments, 59 from family offices, 81 from wealth funds. Pension is huge, 401 million, and mutual funds 480 million. That's just 1%, just a hedge. And I don't see why these types of institutions wouldn't do it coming up or coming soon, because Bitcoin is the best performing asset class ever over the last decade. It has beaten oil, it has beaten gold, it has beaten the pants off of every stock. So if you want to grow wealth, this is what you would recommend. And what we've seen here is a explosion of institutions actually getting involved. I mean, we have Fidelity Digital Assets with 7 trillion assets under management, TD Ameritrade with 1 trillion. We've got Van Eck, the big gold bugs. They just put this out and said, hey, we're big on gold, but we're bigger on Bitcoin now. And they laid out why that is. The big guys, Grayscale, they now have 3.7 billion assets under management, where their majority of investments come from institutional investors, dominated by hedge funds, and that's just happened for the last year and 3 months, and has only been increasing. And now we've got Paul Tudor Jones coming in, who is that investor legend, and he's taken his 21 billion assets under management and said, hey, I'm going to put 2% into Bitcoin futures. So we have all those things on top of, we got institutions coming in as custodians, just like Fidelity is, just like Bakkt and Galaxy Digital, and a new one, we've got Komeinu. Yeah, Nomura and Komeinu. So if we take a look at what is happening, just take a step back. When in doubt, zoom out, and we take a look at what is going on, we can say, hey, there's a lot of positivity going on as far as institutions. And that is the fourth wave, and I'll explain that in a second. So let's move on. Bitcoin is a great speculation. Paul Tudor Jones, the founder and chief CEO of Tudor Investment and widely considered one of the world's most influential macroeconomic traders, told CNBC, adding he's putting in 1%, maybe 2%. And he's clarified it, said, yeah, it's about 2% of all of his AUMs, or assets under management. So the expectations, and I'll sum it all up right here, that institutional investors could be about to buy into Bitcoin and cryptocurrencies is thought to have contributed to Bitcoin's 2017 price explosion, which saw the Bitcoin price go from 1,000 to around 20,000 in 12 months. So that was a big indicator. I was here, everybody, I mean, you were probably here too, and we were all excited, but I didn't really put it together until I saw this interview. And this is Alex Mashinsky. He is the Celsius CEO. I want to say thanks to Win Mullet to giving me this information. And he's going to talk about the 4 waves of investors. And the 4th one is already here, and they're dipping their toes in the water. And that's why I think that even though we hear these stories about 50,000, 100,000, it's going to be 1 million, and we get sick of them, we have to remember that, yes, this is going to happen at some point. The question is when. Take a listen.
Maybe let me explain this from the last 10 years, right? Because really, when Satoshi Nakamoto, it must be a female, because only a female could come up with such a beautiful idea. But Satoshi created the Bitcoin, and then the anarchist came and grabbed it and said, hey, it's like a 4-man relay race, right? The anarchists grabbed the baton and started running and said, we're going to blow up the world with this Bitcoin. And they couldn't get even 1 million people to join them, right? So they had to hand off the baton to the libertarians. Yeah. So 3 million libertarians showed up and said, we're going to save the world. Thanks for giving us the baton. We're going to make the world a better place using the blockchain. And they couldn't get more than 3 million people. So now we're at 4 million, and there's just not enough adoption, right? And then the speculators showed up. This was just 2 or 3 years ago.
In 2017, that was the year.
Exactly, that's when everything started going up. So they kind of took the baton at about $2,000 a Bitcoin, and they said, we're going to run it all the way to 20,000. We're going to hand it off to the institutions. We're going to give it to Fidelity. We're going to give it to Goldman Sachs, and because it's the first time that the institutions are not on the next big thing before the speculators, right? But they dropped the baton. Why? Because institutions said, hey, we don't understand the regulatory clarity. Okay. We don't understand the securities involved, and we don't understand how we're going to run this, right? How it's actually going to operate. So there's a gap in adoption, and that's why the prices of Bitcoin have dropped 80%. But from a usage standpoint, you can look at the transaction and everything else, and they're all still going up. So I think we are definitely, we cannot stop this. This is accelerating for sure. And all the people who are thinking that Bitcoin is dead and rest in peace and all that stuff, really don't understand how big this wave is, and they're just going to be drowned by this tsunami.
So you have to understand, this was 1 year ago. So in that 1 year, from March 7, 2019, all the way to today, look at what has been happening with institutions. All the rails are being built. They're all coming in. This is a good time. It's just that I feel we're on one of those last waves, and we will see. So he talks about this, and then if you don't know Alex Mashinsky, again, Celsius CEO, I've been reading a lot about him lately. It's a fantastic individual. And he was the grandfather of Voice over Internet Protocol, or VoIP. And so everything that we do as far as like talking over the internet right now, if you're talking about Zoom and things like that, he was the creator of that all the way back then. And since then, he's created 7 more companies. I haven't found any huge scandals with this guy. He seems like he's a good guy. And it sounds like he wants to change the world, and he's a small business owner, or actually a big business owner, excuse me. I'm just a small business owner, and he understands the problems with the banks and all the different problems that arise from that. And I think he's trying to do good things. But there's one thing that he says here, and this is the last thing we'll go over, when he's talking about blockchain and how it's going to swallow up everything. If you think the internet was big, and I was around when the internet came, just wait till all this really gets going.
Realize, playing with the internet back in the early 90s, that voice is going to be free. Voice is going to become an application on the internet, even though the internet at that time was really, it was all dial-up, right? It was, the internet was an application on the phone.
AOL and the ringing and all that stuff.
Exactly.
Yeah.
So the internet was an application on the voice network. And I said, no, you don't understand. The internet is going to become so huge that the voice network is going to become an application on the internet. Mm-hmm. And today we're going through the same thing. So you mentioned VoIP to MoIP. The blockchain and cryptocurrencies are the future of everything, meaning that network is going to be 1,000 times bigger and more powerful than the internet, because it requires much, much more processing power. And the largest network always wins. So I know it's going to be very controversial, but I'm saying the same thing happened with the phone network collapsing into the internet. The entire internet is going to collapse onto the blockchain. Because people think that the blockchain is a feature of the internet, but really the blockchain is like a black hole. It's just going to suck everything.
It's like Internet 3.0.
It's like Internet 3.0, yes.
And we do.
It's even bigger than the internet.
So I can't say any better than that. So hopefully, I mean, we started with some pretty negative stuff, but hopefully you can see where everything is going. I can see it. Just the question really is when. So last up, 61% of Bitcoin hasn't moved in more than 1 year, which mirrors bull run to 20,000. And I like to hear these stories because that means people are holding on. And when they hold on, that means the price goes up. So the more we hold, the better off we are because supply and demand. So according to data provided by Glassnode, 61.33% of Bitcoin's circulating supply hasn't been touched in more than 1 year. It surpassed a previous all-time high of 61.28%. That was registered on January 15th, 2016, when the Bitcoin price was changing hands at $362. Man, if I could get that price. Of course, I say that now, but maybe in the future, in 5-10 years from now, people are like, man, if I could have just gotten Bitcoin at $9,238, whew, that would have been sweet. So here is the actual data from Glassnode, and the gold part here is the amount of people who are or have active addresses and are holding. And then of course this black part here is the actual price. So around 2016, so around 328, right? Then it just became this parabolic, well, not a parabolic, it just went up and then just went boom to the moon. And then you had, different Bitcoin addresses just collapse because people were selling and off it went, or they condensed, or whatever you want to say. So now we are seeing the same type of thing. We are at an all-time high as far as 61.33% of Bitcoin's circulating supply hasn't been touched, and the same thing is repeating itself. So history doesn't always repeat, but sometimes it rhymes, as they say. Then finally it says, this is why bulls shouldn't expect immediate price appreciation this time around. Going back to Bitcoin's earlier days, the price of the leading cryptocurrency indeed went through the roof from $1 to $29 in 5 months, after the percentage of unmoved coins reached a new high, which was only 29% on February 17, 2011. So I will just say this is my final thoughts, is that I hope that it takes longer than 5 months, because me as a DCA, as a dollar cost averager, that just gives me more time to accumulate. Maybe I can squeeze in another Bitcoin, who knows, among other things that I have invested in. So that's it for today's stories, I want to say thanks for sticking with me through everything. Just as I always do, if you don't know, there's a join now button. Doesn't get you anything special, just allows you to like give me a tip essentially. So level ones, they give a couple dollars for, they say, hey, thanks for the video. I say thank you so much for donating, appreciate it. Level 2 gives a little more and I give them a shout out. So All Right Soft, Wen Mullet, myself, who else? Dave Plummer, Grant Sharman, Bruce Wood, Baking Benjamins, Noel Flippin' Vegas, Martin Lewin, Michael Ralph, William Howell, Crazy Crypto Canuck, Tessie Ryosaki Positive, Trock LLC, JC Durix, Crypto Veritas, John Miller, The Office, L. Merg, Michael Jeffrey, The Kell Show, Mage Research, Andrew Herrera, Terry Prospery, XRP Carolina, Whatever, AE, and Hero Soap Company. They do soap. And that's it. There's 2 things I want to announce. At the end of this month, which is in about 2 days, 1 or 2 days, I'm going to be deprecating the level 2. So I want to say thanks to everybody who has donated. But since we've been putting more and more information out there, at the end, it does take a lot longer as people start to come in and they want to be a part of level 2 and get the shout outs, which is great. I really appreciate it. The problem is it takes away, because the longer we do the videos, the more people, the more time it takes to watch all the stuff, right? And I'd like to do other things. And one of those things is to do the scam of the day, to do more with the different exchanges and wallets and DeFi type of stuff to get people the best type of rates and just review that stuff. So every minute counts. And I think, like, again, I appreciate everyone's level 2. I will just keep the level 1, and probably what I'll do is just give a couple of shout outs here and there at random. I think that's the best way to do it, and it won't take up too much time. Not that it takes up a lot of time, but I think it's time to go in a different direction. So that is what's going to happen. The second thing is, if you get anything from Dan Digital Asset News or new@gmail, that's not my email. My email is dandigitalassetnews@gmail. So Dan Digital Asset New is a scammer, so please wipe him away and don't listen to him. He's going to want you to get some kind of trading thing. I don't do trading, so I don't know what that's all about. And that's it. So thanks for sticking with me. Really appreciate it. See you on the next.